Hello, everyone. Welcome to today's HYCU webinar. The title is Decoding DORA, Navigating Digital Resilience in Finance. For those who are just starting to join, this session is going to be recorded. You will receive a deck at the end of the session via email. If you have any questions, please leverage the Q&A panel or the chat panel. We will make sure to answer any question that you have at any point in time. Just let us know. And if we have too many questions, we will make sure to send you an email with a response, but I promise you, no question will go unanswered. So thank you so much for your time, for your attention today. We're very, very excited about this topic. My name is Andy Fernandez. I'm the Senior Director of Product Marketing here at HYCU, the fastest growing data protection company in the world. But I'm very excited because we have a guest speaker today, and I'd love for her to introduce herself, Anna Karin.
Thank you very much, Andy. So my name is Anna Karin. I am based out of Norway in Scandinavia. I am the CEO of a marketplace, Atlassian marketplace app vendor called Cantega SSO. We work with identity access management plugins. But I also have some extra jobs besides my main role. So in this context, I have two roles as board member in entities that are under DORA regulation. So one of them is a listed bank. The other one is a fast-growing payment company, B2B payment company that has operations across 3 Scandinavian countries. And because of that, I know very well firsthand what it's like to feel the personal responsibility for compliance in this area and why it is important.
Thank you so much. I'm very, very excited for this because a lot of the times it's, we speak on theoretical terms, and it's very good to have somebody here who's actually going through DORA themselves, who is not only has an expertise and an understanding of the world of IAM, but also as somebody who is going through DORA themselves. So this is why it's so important. If you have any questions for us, please ask, because this is a perfect opportunity to talk to somebody who's going through it. But with that being said, let's go quickly through our agenda today. The first thing that we're going to understand is why. Before we actually get into the weeds of DORA regulation, not only the basics, but what it really means for your organization, it's very important to understand why this regulation has come when it comes to understanding third-party risk and the EU's response to that risk. Then we're going to get into the DORA 101, who, the what, and the why. What is DORA? What is the timeline? Does that impact me? What if I'm an American or US company or a multinational? Does that impact me as well? We're going to go through all of this. And we're also going to take a look at the technology stack. There's a lot of questions that we've been getting around, well, this is what my environment looks like, Andy. Are all of these services going to fall under DORA? We're going to tackle that as well. And then we're going to dive into 2 specific areas of DORA regulation. The first one, very critical on the prevention side, identity access management. We're going to look at specific articles that dictate what those requirements are. Anna Karin is going to guide us through, and we're going to ask a ton of questions from the audience around that section of DORA. And then we're going to conclude with understanding the business continuity requirements. The reason we're going to cover the business continuity requirements is because this is actually relatively new and innovative legislation that is asking companies something that's never been done before around SaaS backups, around offsite recovery. So it's very, very important to address. And of course, we'll also have an open time for Q&A as well. Now, let's first dive into why. Why is DORA actually happening? Why is the EU coming out with a legislation, with a directive so focused on third-party risk? Well, it's very clear why. If you look at the news, whether it's not just technical news, but also mainstream news, you're going to see third-party incidents every single week. Everyone knows about the elephant in the room. We saw what happened with CrowdStrike, but we've also seen so many incidents before and after that around organizations that are using cloud vendors, that are using distributed services, third-party services, where there is either a supply chain attack or some form of disruption that then disrupted all of those customers as well. Now, we live in a time where technology stacks have changed. The ability to spin up compute and services is easier than ever before, but that doesn't mean it doesn't come with risk as well. So what DORA and what the EU is looking at is understanding organizations are going to use SaaS and cloud services. They're going to use third-party services. It's best of breed. But how do we write legislation that makes sure that organizations and our financial services and our infrastructure is safe from it? And that's the reason why we're seeing DORA. Now, one thing I want to mention before we dive in with Anna-Karin is it's very important to understand in your organization how much your tech stack and the services that you use have changed. We take a time machine, and even just 15 years ago, your organizations were leveraging data centers and colo facilities, maybe some managed service providers, but for the most part, critical production applications and all business applications lived as physical and virtual machines. And you had control of it. Think of it as a castle. You could see it, you could touch it, you can make sure that you had uniform protection, uniform recovery, everything was standardized. But ever since Microsoft 365 and Salesforce and the hyperscalers, every business application, even production services, now can be consumed as cloud services, which means I can just subscribe, which means now that my data and the organization's data is, even if it's in my residency, it's in someone else's control, in the hands of a third party. This is very important to understand because a lot of organizations often underestimate how many SaaS applications they actually have. And I'd love to ask the audience, if you can add to the chat as well, if you could take a guess in your organization, how many SaaS applications you have. I'd love to hear your perspective, especially somebody in IT. How many SaaS applications does your organization have? Please put it in the chat because I will share some findings from a lot of the surveys that we've done recently that actually show how much we underestimate this. So please add it to the chat, and later on in the session, I'll address that point as well. But now that just to summarize things, our tech stacks have evolved forever. We rely on third-party services. These third-party services are incredible, but we need to be responsible about how to mitigate their risk. The EU is actually pioneering legislation around this, and that legislation is DORA, the Digital Operational Resilience Act. But Anna-Karin, I'd like to get your perspective on this. For somebody in the audience who has never heard of DORA before or is encountering this for the first time, how would you briefly explain what it is?
DORA is a new regulation. It comes from the European Union, and it's designed to improve the resilience of the European financial ecosystem in face of digital disruption. And if we think of it, over the last 20 years or so, the financial sector has become much more digital, much more dependent on each other. It's more like an ecosystem than separate entities. And one mistake, we have seen that many times also in my country, one mistake somewhere at one point in the value chain can have knock-on effects for many of the other players in the ecosystem. And DORA is designed to make the system much more robust in this new world. And what it requires, so first of all, most countries in the European Union will be need to be compliant from January. So in, 3 months from now. What it requires is all financial institutions to map their digital value chains, like you described. So what ICT components are involved in my value chain, not only the ones I know of, but also the subcontractors of my subcontractors. And we actually need to share that information with the FSA, so the regulatory authorities. It's really important to put governance in place. So traditional banks very often have good governance for handling financial risk, but the operational risk that is connected to IT systems is not always as thoroughly treated. From January, it's a requirement, and it's a requirement on board members like me to actually take ownership of these processes. It's important to put governance in place to assess and mitigate risk. Like I said, it's important to share information about threats and incidents. So here in Scandinavia, one of the biggest banks, for example, have been under attacks. They have noticed attacks for several months now. They were out in the media yesterday and the day before yesterday and shared that this has happened. And we believe that this is coming from government organized activity. And why do they do that? They do that to help other banks in the ecosystem respond to this and understand this risk. So that's the main objective and the main elements of DORA.
Perfect. Thank you so much. Now, I think we understand that this is a critical response. And we know that, of course, it is directly targeted towards financial services companies. It's not just banks or investment firms, but payment processing companies, credit institutions. But one that was surprising to me, and I actually had the question myself for you, was what about technology companies that service financial institutions that are part of that value chain? Are they under the same DORA requirements?
Yes, they are actually. As a consequence of being a subcontractor to someone who is under DORA regulation, you have to comply with the same requirements. And I think many ICT vendors have received questions about things like backup, things like resilience testing, for example, especially over the last 6 months. Maybe without understanding what the reason is behind. The reason is that a lot of investment in the financial sector in Europe has gone into mapping these digital value chains. And one part of that mapping work is that you actually have to go out and ask your subcontractors if they are compliant with these different parts of DORA. So, and to what extent you are an important, or it's important for you to be compliant, it depends very much on how the bank or the payments company or other financial institution uses your software. So the closer it is to core processes in the financial institution, and the higher the value of money that the financial institution actually loses if your software is down, the more important you are and the more likely to be on the radar, to be on this risk charts of management and the board in the company.
No, that makes total sense. Now, it is part of the value chain. You know, in the past we could protect ourselves. We had our data center and our VMs, and if something bad happened, it was only our fault. But now, even if we do everything correctly, if somebody else has an issue, then it's our issue now because we live in a connected world. Now, the part where everyone really focuses in on is, well, what if an organization is in violation of compliance? What are the actual consequences if they don't meet the compliance requirements from DORA?
First of all, many of the requirements that are now labeled DORA, they are common sense put in systems. So if you are a digital bank, for example, protecting your online sales channel has always been important. If your online sales channel goes down, we can put a $$ per hour or $$ per day cost to that. So the financial consequence, if one of your core processes goes down, is number one. DORA is similar to GDPR, in the sense that as a board member, like I am, I can get personally fined if the organization that I am responsible for is not compliant. So that's a very important thing also, and a very important reason why there are many people asking these questions to subcontractors right now. Of course, also, if you're a digital provider, you are dependent on the trust of your customers. So reputation risk is also very important often for financial institutions. And the bigger you are, the stronger you feel this risk.
No, it makes total sense. And this is not simply legislation for the sake of it. It is in direct benefit for a company to follow these best practices. When reading through DORA, whether it's the IAM, the business continuity section, these are all best practices to protect yourself from today's threats, not the threats from 15 years ago that we're used to. But one core element here, and you've already kind of described this, Anna-Karine, in the value chain, is the understanding of the technology stack and how they've evolved. And one of the core, I would say, terms here that gets misrepresented is an ICT. How would you explain in general terms what an ICT really means to somebody?
I think ICT in this sense, at least the way I have thought about it when I have been involved in this project, is ICT is either software, hardware, data services, and like you say, cloud services that are not necessarily on your premises, but they can be hosted by someone else. but that your value chain is dependent on.
No, that makes a lot of sense. And one of the things to notice here is these ICTs, as you defined it, they've evolved. We talked about the castle, but it's very important to understand how we went from a castle to an entire world of distributed services that we rely on with dozens of vendors. I think somebody in the chat already put that their organization uses 50 SaaS applications. And when you look at the average and mid-sized organization, based on the results that we've seen, it's over 200 SaaS applications. And it's very easy to actually see why. 20 years ago, when we had the castle, it was easy. Everything was a VM. Jira was a data center edition. It was SharePoint Server. It wasn't Microsoft 365. Everything was hosted on-prem. And then we saw kind of the first pioneers in SaaS and cloud, the Salesforce of the world, the 365, but also the public cloud. And then what we saw too, though, was it wasn't just people playing around with public cloud or using it for storage. People actually moved production. They lifted and shifted and they modernized. And now the applications that could be financial services experience, like payment processing, isn't no longer on-prem. It now lives within a third party. And then we saw the explosion of SaaS applications. Think of how easy it is to buy something like Jira, or how easy it is to buy any type of SaaS service that within 3 weeks, it's mission critical to your organization. So it's a slow evolution, but tech stacks are unrecognizable, even in the financial services area. But one of the questions that I asked, and you briefly alluded to this, Annika, was people might say, well, yes, we have 300 SaaS applications, but some of them are for graphic design, and the other one is for compliance, and the other one is for HR. How do I know what a critical ICT is to my organization?
Absolutely. So first of all, it doesn't follow the brand of the application. That's really important to understand. What determines if it is a critical component or not, it's how the customer uses it and what the consequences are for the regulated finance institution if the software goes down. So, for example, in a company that I have worked with that has a relatively simple business model, they live from online sales of loans. They have 2 core processes that are more important than anything else. One is the agent channel, the online sales channel. And because when you lend money as a bank to customers, there are capital requirements that mandate you to have a certain buffer of capital in the company. And the way that you collect that is through other digital channels where you get money from customers and then you pay interest like normal banking accounts. If one of these processes stop, then it's very costly for that type of bank. Sales for an obvious reason, but if there's not enough capital, then you need to take down the sales rate, and that also means a loss in US dollar per hour. So this was one example. It's different in different companies, but the key is what are the financial consequences for the customer if your system goes down? How do they use it? I have seen, since we're talking about Atlassian, I have seen Jira Service Management, for example, being used by IT support and IT operations in banks in a way that stores information. So even if Jira Service Management is not running sales or funding or any of these critical processes, the information about payment nodes that is stored in JSM issues can be misused to take down one of these core services. And then in these organizations, JSM can also be considered a critical system.
That's actually very interesting. And sometimes it's challenging for people because they don't have a guide that tells you what is an ICT, but you have to use your judgment. But one of the things, Annika, that we put together was we actually showcased kind of what a modern financial services stack is. This is not a specific customer, but this is several of our customers and people that we've spoken to. And we kind of put together from these financial institutions what an average technology stack may look at, not only for prod, but all of the services like you mentioned, like JSM, that are used to support these prod applications. And what we notice is, of course, there's still an on-prem footprint. That's not fully going away. They still leverage their VMs. These are mostly protected. They have firewall infrastructure, they have networking, they have backups, they have Active Directory. But what we notice too, though, is that now they have modern services running in the cloud, which is, hey, I'm actually hosting an application in AWS, but my analytics, my data science methodology, my pipelines live in Google Cloud. And it's not just that AWS is an ICT. There's 30, 40 services that are used that make up this application in AWS. But they're also using applications to support them. And as Anna mentioned, if JSM often touches prod. And if that goes down, that's a critical ICT. But what about the Git repository or issue tracking or even your infrastructure as code? All of these single applications are critical ICTs to make up this value chain in an organization. And of course, how are you securing this access? All of this information is very critical. So when we think about ICTs and when you're scoping this, it's very important to do a deep dive and actually understand what happens if every single point in this value chain, if something happens to this specific application, is there downtime? Is there some form of liability with customer data? That's the way to think about these ICTs. Now, one thing that I wanted to mention too, because I actually made a good point, is depending on the impact that these ICTs have if they're down, that also applies to the level of proportionality that you focus on. And we'll touch on a little bit of this as well. But one question that I wanted to ask you, because this is something that is fascinating to me, is sometimes there are certain services that, let's say they don't have a monopoly, but they have the majority of the market share. There's a big focus on concentration risk in DORA. What's your experience and your perspective on that side?
I think it's really important, and it's one of the main reasons I think that the European Union has come up with this DORA regulation. So in my country, for example, we have one core banking software provider that owns 80–90% of the market, and of course, an attack that takes down their operations, that also takes out most of the banks in our country, and of course that means also the liquidity flow. Another example could be the intrabank clearing, for example. If the intrabank clearing is stopped, then 70-ish% of all the liquidity flow stops within a couple of hours. So these type of bottlenecks or places in the ecosystem that have very big ramifications, more system-wide ramifications, are really important for the European Union and the DORA regulation to protect.
No, it makes incredible sense that we've seen this already. We've seen, for example, public cloud vendors where somebody's accidentally deleted entire government instances, or sorry, entire pension instances, and all of the data, the configurations, customer data was gone. We saw the CrowdStrike incident. It's not that these companies are doing something incorrect. It's simply that they have a lot of market share. It makes them a prime target, whether it's malicious behavior or simply mistakes. And the EU is doing an excellent job of addressing this concentration risk, just like Anna mentioned. Now, let's understand a little bit more of the requirements. And the first thing that we're going to address is, look, there's a lot of requirements. There's several pillars of DORA. They go everything from prevention, classification, incident response, detection, the fundamental cybersecurity things. They go very deeply into business continuity, into testing, and it's a 200-page document. I recommend that you hire a consultant that you don't read it yourself. You want to make sure that you have everything you understand. But we're going to focus on two specific areas today. Why? Because they're relatively newer in this space. There's always been networking, there's always been firewall infrastructure, but how ICTs are now really SaaS cloud applications, it's important to think about two things: how we manage access to them, and then how we manage the data itself in case something does happen from a response and recovery perspective. Both of these DORA really emphasizes. So I wanted to make sure that we brought somebody like Anna to actually answer a lot of these questions, especially on the IAM side. But with that being said, let's move over. Let's talk a little bit about identity and access management. So Anna, tell us a little bit about what those requirements are within DORA, and then we'll get into those pillars, and I'll ask you a couple questions from there.
Absolutely. So Article 9 of the Digital Operational Resilience Act states that regulated entities are required to have sound administrative processes to make sure that it's only the people who have legitimate reasons that have access to their most vulnerable or most critical systems. And for me, so I work with identity access management every day, me and my team. It definitely makes sense. The way I think about this is the identity access management system is the guardians of the fence around your ICT infrastructure. There's a lot of good things in DORA, a lot of measurements you can set in to improve, for example, things like backup, like resilience, but it doesn't help if you let the wrong people in. So Article 9 is really about keeping the wrong people out and making sure that you have good processes to do this timely, continuously, all the time. Yeah.
Thank you. And it's changed a lot from the days of simply making sure that there was network access to servers. The world has changed a lot, and I know that the work that you're doing at Contega is really striving to help customers through the SaaS challenges as well, especially in the world of Atlassian. But could you tell me a little bit more specifically, right, what are some of the elements of DORA, especially within IAM as well?
Yeah, so identity access management is relevant as I see it in all the 5 pillars of DORA. So in our work, we are basing ourselves on the KPMG framework. They use the 5 pillars of DORA. So it's ICT risk management, like we have talked a lot about until now. It's incident reporting, which is really important to tell the parts of the organization that have been impacted, that something has happened and what, but also sharing it. So the information sharing pillar, sharing it with others in the ecosystem, like this big bank, for example, here in the Nordics did this week, so that others who might be impacted also know what is going on. It's ICT third-party risk management. So again, you can have sound administrative processes around identity access management in your own organization, but if a critical subcontractor doesn't have that, that's a loophole that can be used to attack you. So that part of this is really important. And then resilience testing. So DORA requires to do resilience testing every year, and more thorough resilience testing and exercising every year. In my experience, it's really important to make sure that this resilience testing also is testing the onboarding and offboarding of identities and the regular review of identities. And we're going to get back to that a bit later.
No, perfect. Now, I think the audience has a good fundamental understanding of access management. Many folks on this call probably manage a lot of IAM services themselves, but there's a lot of very specific points that we wanted to go over because they're very relevant to DORA, but they're always questions that we're getting. And I wanted to ask you personally. But the first one is a huge focus on not just having, obviously, identity access management, following best practices, but one question we're always getting is on vulnerability, risk, provisioning points. How does an organization go about actually reducing provisioning points and making sure that they're as safe as they can be at the beginning?
Yeah. So our recommendation is based on 11 years soon of experience, is that the fewer provisioning points you have for user accesses, the less vulnerable your company is to intrusion. So our clear recommendation is to establish a single point of truth, a single source of truth, typically a centralized IDP like Entra or Okta, and then to enable single sign-on from that IDP to all the different software applications you have. Instead of creating users in every local software application, an SSO application will set up a tunnel from the IDP and close all other accesses to the local software and only let through traffic and users that has been approved by the centralized IDP. In that way, you reduce the number of places where you need to keep track of users and make sure to remove them when they no longer should have access. You reduce the risk for manual error, because if you automate this process, typically connected to your HR system, it's quite common, for example, then you reduce the risk for manual errors, leaving accesses open that should not be there.
Absolutely. One of the things that we've noticed too is, although we'll read in the news about how sophisticated cyber attacks are, so many times the reasons that very basic cyber attacks are successful is because people don't follow the best practices. Having MFA, having SSO, leveraging and reducing provisioning points is one fundamental way to at least maintain safe. But one area that I wanted to ask you, Akarin, was if organizations had the same number of employees and users for the rest of their lives, life would probably be very easy. But let's talk a little bit about what are some of the risky scenarios that organizations have regarding their identity, and how do you mitigate against them?
Absolutely. So what typically happens, and it maybe happens at a higher rate now than 20 years ago, is that organizations change. So and the bigger the organizations, the more these movements typically are. So people leave, people change job responsibilities within the financial institution, companies can merge or get acquired, and keeping track of who should have access to what part of the infrastructure in an ever-moving, changing organization is like shooting a moving targets for IT administrators. So in this context, in our experience, approximately, so based on the base user bases that we have access to and visibility into, we see that on average 20% of all users belong to people who should no longer be there. So people who have left, consultants who have left, or employees that have moved to a different department and should no longer have access to very critical information, for example. So what we recommend is to configure automatic offboarding routines. So we provide this as part of our apps to our customers. It improves or setting up the right rules, clever rules. It improves your compliance situation. So we, for example, work with a bank that cleans up all users that have not been active for 14 days as a main rule. And they are even stricter with external users. So they have a lot of consultants. They have some customers, collaborating banks that get access to their internal system. And for them, they close them down after 2 days. Why is that? Because for your own employees, you have legal processes, you have contracts, you have more formalized processes often. But for externals, these processes, in my experience at least, are much less formalized. And of course, an external consultant or a third-party vendor might have less interest in being loyal to you than an employee. At least you cannot be sure. So this is really, really important.
This is the irony is the area with most gray areas, the riskiest area, as you mentioned. Contractors, people, guest users, these people maybe have no loyalty to the company. Maybe payments are late. These things happen all the time. When customers, we speak to them and we talk about insider threats or former insider threats, they're always skeptical, Anna-Karin, because how could anybody in my company betray me? How could they do something? But if you no longer can name every employee in your company, you now exist in that danger zone where there could be people who are disgruntled. There could be contractors who are not happy. So this is a critical element. But one other question that I wanted to ask you as well, though, is when it comes to something actually happening, there is an intrusion. What are the recommendations? What should organizations do, right? People think this is the end, but what should be the approach in assessing the impact first?
Absolutely. So a key requirement in DORA is to be able to trace exactly what happened, exactly what users were impacted once a data breach has happened. So to be in a position to provide this information to the FSA or to your own organization or to the wider group of banks that you're a part of, it's really key to make sure upfront that the provider that you use enables you to actually gather that information. So there are several things that are important. So logging, detailed logging is really important in the identity management application. So logging all attempts, for example, or logging in attempts, both successful and unsuccessful, and make it easy for the IT administrator to extract these logs in a meaningful way. Very often software upgrade, or it's not uncommon at least, that software upgrades lead to unexpected outcomes. And in interest of being able to quickly restore access if something goes wrong, we recommend that you make sure that your software provider automatically takes backup of the configuration ahead of a software upgrade. That's also really, really important. Ideally, the provider should also provide your company with the option to trigger backups based on your business logic. So an example from banks in Scandinavia is that the intra-bank clearing, so the transfers of money from one bank to another, they typically happen within 5 time windows during the day. So taking backups right before and right after one of these time windows, for example, is a common logic that might make sense for some banks.
It's very interesting. And one of the things as well is it's very hard to do remediation if you actually don't know the point of intrusion. It's just very, very important that when you have a vendor, that there is audit logging, there's a time and place, and there's notifications enabled, because otherwise it can be very dangerous and remediation will be an absolute nightmare. But one thing I mentioned though, Anna-Karin, and you mentioned this at the end, we briefly touched on it, around the risky business of offboarding and making sure that the rules are there. But third-party collaboration, it's important for every company. There's not one Fortune 500 or financial services company that is not working with others, that doesn't have guest users, that doesn't have contractors. How do they do so in a safe way? How do they do it in a way that makes sure that there are no insider threats in the future?
Yeah. So one thing that I have seen, or we have seen here in Scandinavia, we have many of these common services that are used by several banks, for example, ID schemes or joint payment companies, joint KYC companies. I have often seen them use Atlassian software to share information with their customers. In their case, their customers are users in the bank, so people who work in a bank. And in a country like Norway, where we have 150 banks, it's impossible for a centralized provider to keep track of who comes and leaves from all the different banks. So putting some measures in place to make that half external or semi-external access to your system more safe is something that we recommend. So for data center users, protecting the external user access with SSO is a good option. In that way, you can give access on the internet, but it's still SSO verified. So it's verified coming from an approved domain. To continuously monitor activity, like I said, so that you can quickly respond to changes in login pattern. That is something that we also recommend. And like I said, to set up automatic offboarding rules. So in a typical organization, in our experience, 5 to 10% of all users are external to the organization, so they work somewhere else. But these users often require 50% of the IT administration's time, because often there is not so much structure around the offboarding process for these users. So these are 3 things that we recommend when you are collaborating across the ecosystem with Atlassian software.
No, that makes total sense. Now, the one last question that I have for you, Anna-Karin, is something that is also very important across all requirements in DORA, and that's the ability to test, the ability to actually make sure that the solution you're using is working in the event of an intrusion. How would you how would you recommend the testing side?
Yeah, absolutely. So like we talked about before, so no approach to protecting your company's digital access can be stronger than the fence, so the identity access management system that guards its borders. So that means, in our experience, that the annual resilience tests that are mandated by DORA, they should also include proper testing of the entire identity access management life cycle. So checking if there is administration procedures in place, that they work, validating that the access provisioning rules are actually followed, that the requirements are met, verifying terminations, like we talked about, they are maybe more important than the onboarding, because people can be terminated for various reasons. We know that 70% of the people who have left an organization involuntarily and whose accesses have been left open, they are misused to harm the organization. So checking that the offboarding actually works is really, really important. Checking that user access reviews are done on a regular basis. So if you automate these reviews, then you can prove it very easily with logs. What we have seen is that when you do reviews, it's not uncommon to detect toxic combinations. So toxic combinations are accesses that shouldn't be there and accounts that are overprivileged. So one example that we have come across in our customer base is a customer that unintentionally had left the access open for everyone in the organization, including actually external consultants, to define the bank account for the biggest payments or payments from the biggest customer. And that meant that in theory, anyone could redirect that company's main revenue stream to themselves, typically to their own bank account. That's a compliance issue under DORA, but it's also a huge business risk, even if you're not regulated by DORA. So regularly checking these combinations and what can you actually do with this account is really, really important.
You know, that's one of the sayings, Annika, that we have in the world of backup is if you have a backup solution but you've never tested it, you don't know if you have a backup solution. And it seems like IAM is the exact same thing. It's the most important perimeter of defense really around all of these different ICTs. It's very important. I really wanted to thank you for allowing me to ask all these questions. But for the audience, Annika and the team at Cantega have actually written down an incredible blog on all of the DORA requirements and how that relates to identity access management, with a good twist on the world of Atlassian cloud as well. So if you go to the chat, there is a link to this blog that they've written. You can go to their website, you can ask for more information and understand how it works, because it is an incredibly important thing to understand. Services like Jira Service Management and Jira are part of production, and they're very important. If you have any questions for Anna Karin as well in the audience, please add them to the chat. She'll be on with us till the end of the webinar to answer any question that you have. Now, let's move over a little bit to the side of backup and recovery. And this is what we like to call the last line of defense, right? So you have networking, you have firewall infrastructure, you have identity access management. What DORA realizes is that organizations who rely on SaaS applications, they're not always in full control of what happens to that technology provider. So let's say that there is a data loss event. What happens then? Well, if, for example, there was a password management software that had a supply chain attack and all backups were encrypted, so the customers were left with no data. So the reason why DORA is so critical and emphasizes so much on not only IAM, but on backup and recovery, is to make sure that companies always have the last line of defense, no matter what happens to data that they control or it's data that they're simply subscribed or services that they're subscribed to. So there's two things that we're going to talk about very quickly, and that is on Article 12. If you go to Article 11, it really focuses on the response and recovery side. And then it dictates that you have to make sure that as part of the response and recovery, you have backups. And they refer to Article 12. And all it says is you have to have backup policies. You have to have backup policies that are specifying to the scope of the data, and the frequency of the backup has to meet the proportionality. What does that actually mean? Well, if you were listening in at the beginning, Anna Karin was talking about how certain applications that are so critical to the supply chain, to the chain, to the application stack of the organization. And if this application goes down and it has an impact, a monetary impact on the organization, and the service goes down, then it's a high proportionality service. You have to make sure you protect that as much as you possibly can. Backups are going to be the same. If you have production services, if you have things that have impact on liquidity, as she mentioned, then you have to have very frequent and very strict backups. But nevertheless, just to summarize, DORA requires backups of all of these critical ICTs, all of them. And you have to have backup policies in place. And here's where they go even further. Why? Because third-party risk is real. What if there is a supply chain on the vendor? What if the vendor is compromised? What happens to your data then? So what they position here is that you actually have to have an ability to recover and store data outside of the ICT that you're using. What do I mean by this? Well, for those who've been in IT forever, everyone remembers the 3-2-1 rule. 3 copies, 2 media types, 1 offsite. That is exactly what is being referenced here. Meaning, if something happens, for example, in GitHub repository, I need to have a copy of that accessible outside of the service so that we can access this data and get back up and running. If we don't, then there's serious risk to the organization. So DORA is explicitly requiring for all these ICTs that are important to your organization, they need to have a backup policy, and the data needs to be held and recovered off-site back to production if needed. This is very important. Now, from HYCU's perspective, the approach that we've taken here is a rather unique one and how we're able to help customers do so. I know we're running out of time, but I'll be very brief. We are the fastest growing data protection company in the world. We leverage the HYCU Cloud platform. Essentially what we've done is we've created a unified experience where organizations can protect the most amount of ICTs in the world. No one else is able to reach the amount of ICTs that are protected by HYCU. Not just your production applications, not whether they're on-prem or running in the cloud, but specific SaaS applications like we've covered today, like Jira Service Management, and all of these services are very critical. And HYCU supports all of these ICTs to help you comply with DORA. So the first thing that we want to be able to do, and that HYCU is able to do, is make sure you actually understand how many ICTs you're using. So HYCU is able to, using your IDP, using your SSO provider, is able to actually immediately scan the environment and tell you all of the services that you're using. Not only telling you all of the services in your organization, but actually categorizing them by department and then exposing the ones that don't have a native backup and recovery service. For example, did you know that your Git repository doesn't have a way to recover that data automatically? Did you know that you don't have an off-site copy of this Git repository? This is very important to understand. Before we talk about backup policies, before we talk about off-site copies, you have to understand what are the ICTs that you have to back up, and if you're getting audited, which are the ones that are going to be considered critical. So with rGraph, this is free and built into the HYCU platform, you're able to actually map out your ICTs. And then, specific to Article 12, you have to have backup policies. So what HYCU is able to do is allow you to simply automate the backup policies. A lot of organizations, what they're doing is they tend to write a script and they schedule a job, but scripts require a lot of time, they require a lot of attention, and they're very error prone. If you're doing resilience testing, if there's actually an incident, you want to make sure that you have a backup that you can trust. And what HYCU does is it essentially automates that entire process. You connect to the ICT, you choose how often you want to back that up, whether it's every day, every 4 hours. As Annika mentioned, every single organization is going to have unique frequency requirements, right? It could be every 4 hours. You should be able to choose that for yourself. So at HYCU, you can choose the backup frequency, and then you can also say, well, this is very critical customer data. We should probably have this for a year. Or we're mandated, maybe if it's healthcare or financial services, we're mandated to hold this data for 7 years. So with HYCU, specific to Article 12, you can automate the backup policy across all of these ICTs. And then the most important part is, where is that data? Many times you will see organizations provide a backup service, but that backup service is in their control. meaning that in order to back up your ICT, you have to rely on another ICT in order to back up your data. And the reality is that the most secure approach to backup is to leverage backup solutions that give you the ability to store data in your control. I explicitly mean customer-owned backups. That HYCU does not store those backups, that only the customer has access to those backups outside of the service. So what HYCU is able to do is essentially think of us as an encrypted highway, where you can connect from the instance, whether that's Jira Service Management or GitHub or Jira Product Discovery. And it's essentially the backup policy is going to automatically send data over to an offsite location. Now, it could be AWS if you have an AWS account. If you're a Google customer, if you're an Azure customer, Wasabi, or even on-prem, you can send that data simply to whatever storage you're using. I'm using an AWS example here, but you can send that data anywhere you need to. It's in your control only. You can make the copy immutable, worm-enabled, meaning that if there is a ransomware event, you have a safe offsite copy that you can recover from. And that data is in your residency, in your account, and in your control. No one else can access it. No one else can make a mistake and accidentally delete it. So the point here is that DORA requires you to have backup policies for many more ICTs than you think, and to actually have offsite copies that you can recover from. HYCU is able to fulfill both of those. But just like in Anna Karin's example, you have to be able to perform resilience testing. DORA mandates once a year, but you want to make sure that you're doing this at a very frequent basis, depending on how critical the application is. So with HYCU, not only are you able to restore entire sets of data, but very specific sets of data in order to be able to test across all of my ICTs that the backups are working, that I've proved that I can recover. So if somebody comes and whether it's an actual incident or it's an audit, I can say, look, I was able to back up my Bitbucket repository or my Jira project. We backed it up, we restored it, and here's full logging and documentation for it. So essentially what we're saying is your organization is often underestimating how many ICTs that you have. Your technology stack is much broader than even CIOs and CISOs expect. It's important that you have a solution that can not only help you discover, but protect and even recover and test that, not only in the sense of DORA, but also just as a common best practice for your organization as well. Now, with that being said, not only can you access in the chat a blog that was written in the context of IAM by Anna Karin, but we've also created a DORA compliance checklist that allows you to go in and understand exactly what those requirements are for your organization when it comes to business continuity, Article 11 and 12 of DORA itself. The last thing that I'll leave with you is it's very important, regardless if you choose HYCU, if you choose Kantega, that you have the ability to understand that you can solve the problem. And something that we're providing is free access to our graph. If you simply want to see your entire data estate and have a free scan and understand how many ICTs do we have, under what department, which ones are completely unprotected, you have the ability to have a free access to this as well. You can scan the QR code, completely free, no strings attached. One of our customer success engineers will show you how to turn it on, and it is yours to have. But with that being said, I'm going to make sure there are any questions for the audience. I want to thank you all so much for your time. And I have one question from somebody attending, and this is for Anna Karin. Anna, if somebody wants to understand a little bit more about Kantega, what do you recommend they do?
Okay, yeah, so I believe that we will send links out to our webpage. We have also written a blog article about DORA and the role of identity access management in particular. These links will be shared, so feel free to reach out to me or someone in my team. Our email addresses are also on our webpage, and we'll be happy to help you.
Perfect. Thank you so much. With that, everyone here will receive a recap of the email. You'll have access to everything that we've discussed today. We want to thank you for your time and your attention, and hope you have a great rest of your day. Thank you so much, Anna.